Hello everyone, welcome back to the audit and attestation class. In this class, we'll be going through the AICPA interpretation and guidance. And these guidance and interpretation include 13 main guidance. The first one is about practicing outside United States of America. Second one is covered member in context of an attest engagement. Third one is immediate family member and the close relative, and the fourth one is position to influence the attest client, and the fifth one is key position in the client engagement, and the sixth one is family relationship with attest client, and the seventh one is non-attest services, and the eighth one is the guidance on appraisal services, valuation services and actuarial services providing to an attest engagement, and the ninth one is forensic accounting, and the 10th one is internal audit assistance services, and the 11th one is guidance and interpretation on tax services, and the 12th one is guidance and interpretation on advertising and other form of solicitation for the client, and the last one, the most important one, is the guidance and interpretation on the conceptual framework. So let's dive into to understand all the 13 guidance and interpretation.
Right. So this is audit and attestation. I know we have a long way to go, but I can quickly walk you through what we have covered so far, just to reiterate or recapture in your memory, and then we can start with interpretation and guidance today. First half we are trying to cover that, and then we'll start independence rule. So we are in chapter 2, ethics, professional responsibility and general principle. We covered this nature and scope completely, which include like audit engagement conducted under Government Accountability Office, Government Accounting Standard, and then other engagement. Now we are in ethics, independence and professional conduct, in which we are covering AICPA Code of Professional Conduct, in which we have 6 principles and 9 rules. So we have covered 6 principles and 9 rules all. Now we have around 13 interpretation and guidance. So we'll be covering those today. And then we have independence rules. So we are still in this one. And maybe like tomorrow or in next class, we'll be starting with this Security Exchange Commission. Right. So if you see, we have covered in detail all the definitions, key terms for the entire audit section of your exam. Right. So we have covered all these definitions long way. And then we have started with after all these definitions, we have finally started chapter 2, in which we covered on engagement, audit engagement. We covered key consideration for the audit engagement. We done some practice question. Then we covered this Government Accountability Office and Government Auditing Standards engagement and reporting requirement. In that we covered Yellow Book, 𝐂𝐸, Single Audit Act 1984, performance audit, and we have also touched base on non-audit service. So in this interpretation and guidance also we'll be seeing certain non-audit services also. So we'll be covering those again over here. And here we discuss all in detail about single audit requirement, minimum coverage, financial audit. We did certain practice questions. And after that, we covered other engagements, which is like non-audit engagement, section 60, 70, 80, and then we covered section 90, review engagement. Then we did certain practice question. And in last class, we started with ethics, independence, and professional conduct, starting with AICPA Code of Professional Conduct, right, which is applicable to all the member in public practice, member who are in business or in job, and all other members like educator, retired person, right? So in this, we covered all 6 principles. We covered all 9 rules, right? Hope this is giving you a slight quick refresher what all things we have covered so far. So all these 9 rules we have covered. We have covered exception to the general rules. also, right? And then we did certain practice question also in last class. So today we will be starting with AICPA Guidance and Interpretation. So far we have covered around like 43 pages, right? So now let's see where we are in AICPA Guidance and Interpretation. So these all are, you can say, what is interpretation and guidance is more of explaining or maybe sharing more information relating to what is being mentioned in the respective principle and rules of AICPA Professional Code of Conduct. So these kind of like supporting to those main principles and the main rules, right? So these are interpretation or maybe like guidance to certain terms or terminology which is being defined or might not have been properly defined in those respective principles and rules. So first one is like CPA practicing outside USA. So here like there might be three conditions possible or three things possible. One is like CPA who is working outside India, outside USA, and they are working for the clients only outside USA. So first scenario that would be possible, like the outside US CPA and they are working for outside US client only. Second possible thing could be like it's an outside US CPA firm, but they might be working as a component auditor for the US group audit company, right? That firm, that foreign component audit firm can be a non-network firm. That means, for example, this has nothing to do with your firm. So independent third party firm, that's a CPA firm which you are using as a component auditor, right? And you are requiring their reports for the consolidated financial statement or group financial statement. Third scenario could be possible in outside USA, there is a firm and they are your network firms. Like for example, in top 10 consulting firm, PwC, EY, KPMG, Deloitte, Grant Thornton, BDO, Mazars. So they have like across the globe their network firm. For example, let's say EY in US, right? And they have like EY in India, they have EY in Finland, right? So they have EY in Europe, UK, Australia, New Zealand, right? For example, you are doing an audit of any company in USA, that's parent companies in USA, and you are supposed to sign the group financial statement, that is consolidated financial statement, all right? And then they have a component, or you can say that company for which you are doing the audit, let's say they have subsidiary in India. So for that subsidiary, audited financial statement is also being required if it is, let's say, material to the overall group financial statement. In that case of scenario, either the company will appoint EY India as an auditor for the Indian entity or the Indian subsidiary, or let's say they can appoint BDO, they can appoint like Mazars, or they can appoint a small mid-sized firm, let's say XYZ CPA in India, right? So it's quite possible. So how those interpretation and rules will be applicable to those respective firms. One is like CPA firm, let's say, look at like A point, audit and attestation services for outside US client. That means you are a CPA, you are setting up, let's say, for example, 𝐂𝐚𝐩𝐿 is a CPA, right? And I'm doing CPA practice in India. And I'm doing for Indian clients only. I'm providing like consulting service, audit service, attestation service for Indian clients. It has nothing to do with group audit. So what all things I need to comply with? So member will not be in a violation for any particular rule for departing from any rule stated as long as the member conduct is in accordance with the rules of the organized accounting professional firm in the country. For example, I'm a chartered accountant and I'm doing like audit of an Indian company, right? And it has nothing to do with US, but I need to comply with the requirement of independence rule of Institute of Chartered Accountant of India, right? So as long as I'm complying with those rules which is being required for me to conduct the Indian practice, so I'm not in violation of any independence rules or any AICPA professional code of conduct. But in case the impression is that I'm performing the audit and attestation as per US practice, right? For example, there's a company in India, and for which they might be looking for an investor from USA, right? And the US investor wants like audited financial statement of Indian company. So there might be possible those US investor presume, or maybe client might have given an impression that the audit would be conducted according to the US practice. In that case of scenario, if I am conducting the audit of that Indian entity for which US investors are investing, and client has given the impression that audit will be conducted as per US practice, then it's my responsibility to comply with the General Standard Rule and Accounting Principle Rule of the AICPA Professional Code of Conduct, which we have discussed in our last class. Make sense? Any doubt here? So I'm an Indian chartered accountant. I'm doing practice in India, right? So there might be two possibilities. One, the client has nothing to do with US. In that case of scenario, I need to follow Indian laws and regulations and independence rules and compliance of ICA, right? Second scenario is like Indian company is going for a funding round and the US investor is doing the funding. And the company has given the impression to the US investor that our audit will be conducted in compliance with the US practice. So in that case of scenario, I need to follow General Standard Rules and Accounting Principle Rules of the AICPA Professional Code of Conduct. Make sense?
Yes, sir. I have a doubt here. Sir, previously you said, if we are doing audit, outside US, then we will have to, see the company rules and regulations, like which accounting method they have to follow, whether IFRS
Yes.
or US GAAP, right? So, sir, in this particular scenario, we will have to, the audit is conducted on the basis of AICPA Code of Conduct, or they will also allow, IFRS comes into picture.
Yeah, very good question, Kashish. Here you need to follow the respective rules and regulation of the respective country, but in addition to that, you need to follow General Standard Rule and Accounting Principle Rule of AICPA Code of Professional Conduct. So you'll be following all the Indian rules and regulations, all Institute of Chartered Accountant rules and regulation, right? In addition to that, you need to follow General Standard Rules and Accounting Principle Rules of AICPA Professional Code of Conduct.
Okay. So, sir, which method we will have to follow? Like US GAAP is AICPA, right?
No. It depends on like company. That's management responsibility to accept the accounting framework. So it on them whether they need to follow Indian accounting standard, they need to follow IFRS, they need to follow US GAAP. So that's completely management responsibility.
Okay, got it.
So management will select and we will perform the audit.
And sir, in most of the 99% of the cases, they will follow US GAAP, right?
No, if they are going for a funding, or if the holding is like US company,
in case of funding, then we will have to.
Then answer is yes, but if it is normal Indian company, then they will be following NDS.
Okay, got it.
Right. Now coming to point B, audit and attestation service of US client outside US entity. That is outside US component audit and attestation service for US group purpose by the foreign component. So for example, let's say Amazon. Amazon has a parent company in US, right? And they have subsidiary in India, right? So for Indian subsidiary, they are requiring, it's a material to the group financial statement, and they are requiring a full-fledged audit. So in that case of scenario, let's say they hire a mid-sized firm, like in India, let's say T.R. Chadda and Company, J.P. Kapoor and Oberoi, or maybe Author and Son, like RSM, any such mid-sized firm they have appointed to perform the audit of Indian entity. And let's say you are from PwC USA and you are doing the consolidated financial statement audit. right? In that case of scenario, the Indian CPA, in the CPA firm in India who is doing the component audit of Indian entity, what all rules and regulations they need to follow, and if they don't follow, then why? Then when they are in violation of the rules. So foreign component auditor will not be considered in violation of a particular rule if component auditor depart from any of the ethics requirement with respect to audit or attestation of the group financial statement, as long as, keep in mind, as long as the foreign component auditor conduct in accordance with the ethics and independence requirement set forth in the International Ethics Standard for Accounting. So if like the foreign auditor is following International Ethics Standard boards for accountant rules and regulation, then they are in compliance whether they are following AICPA rules or regulation or not, right? If the foreign auditor is in compliance with the international ethics standards, then it's not mandatory that they will be comply with all rules, regulation, and interpretation of AICPA Code of Professional Conduct. Still, they would not be in violation. But if they are not following international ethics standard and also not following AICPA Code of Professional Conduct, then they are in violation. Right? Make sense? Same goes with the audit and attestation services of the US client outside US entity. So for example, Amazon US, their subsidiary in Amazon India, right? And is conducted by the US CPA foreign network firm. That means, let's say EY US is doing the group financial statement audit and EY India is doing the audit of Indian entity. So EY US and EY India are the network firm, right? So to the Indian network firm, what all rules and regulations they need to follow? They need to follow at least the International Ethics Standard Boards for Accounting rules and regulation to comply with. If they are not following AICPA Professional Code of Conduct nor they are following International Ethics Standard Board of Accountant, then they are in violation of the independence rule. Make sense?
Sir, here US CPA foreign network member firm will be Indian, EY India, right? When you gave the example. Okay.
Right. So again, I am quickly reiterating. So three scenarios possible. Let's say you are a US company and you have a subsidiary in India. So that subsidiary either is being audited by your network firm or non-network firm, right? Whether your network firm is auditing or the non-network firm is auditing, that respective Indian firm need to follow International Ethics Standard Board for Accountant rules and regulation, at least to be in compliance with the independence and ethics rules of AICPA, right? And if the company is in India and they have nothing to do with USA, but US CPA is conducting the audit of it, then they need to follow the local rules and regulations. So not required to follow AICPA Professional Code of Conduct. Right. Second interpretation, covered member. So throughout the journey, we have heard a lot about covered member and its impact on the independence. So what exactly is the covered member in context of attestation engagement, audit or attestation engagement? So covered member are basically the team member, audit team member, right? Engagement team members. Like for example, if you are working with EY, PwC, KPMG, Deloitte, and you're auditing, let's say, Facebook, Amazon, Intel, any such kind of company. So whether you are in US or you are working for these engagement from India, so you both are being part of the engagement team, right? As you're part of engagement team, you are a covered member. One. Second is the individual in a position to influence attestation engagement. For example, let's say you are from EY and you're you are doing audit of, let's say, Facebook. Like Facebook audit is being conducted by San Francisco office of the EY, let's say, right? So EY San Francisco office managing partner, he would be in a position to influence the engagement team. He would be in a position to influence the engagement partner to increase the overall profit of that particular engagement, right? And if there would be any issue, then he would be in a position to influence you, because like the office reputation would be on stake. You're doing such a big account, let's say like a Facebook. It's one of the biggest account for, let's say, that particular office. And if anything went wrong, and for example, that may result into disassociation with the engagement, or maybe termination from the engagement, right? So that may be huge loss of revenue for that respective office as well as reputation, right? In that case of scenario, that office managing partner would be in a position to influence the attestation engagement. Make sense? Yeah, Vineet, Avneet, Jesse. Third is lead engagement partner. So the lead engagement partner is the partner who is finally signing the balance sheet of that respective entity. So that is also comes under the covered member. Fourth is partnering equivalent, who provide more than 10 hours of non-attest service to the attest engagement. Let's say your tax partner, your IT partner, or maybe let's say if you have involved actuarial, internal actuarial. So those partners are also being considered as a covered member for that audit engagement. The firm, including firm employee benefit, and an entity whose operating, financial, and accounting policies can be controlled by any one individual or collectively described above. That means, for example, you are a CPA firm in San Francisco, and your management is, let's say, is a consulting company, and that company derive like operating, financial, accounting policy and other SOPs for you. So they would be in a position to influence the respective engagement, right? So all those would be considered as a covered member, but in general layman language, all audit team members are covered member, whether you are staff or you're a partner, you are an engagement partner, or you're a quality review partner, or you're a tax partner, or you are, let's say, IT partner, any such thing. So they all being part of the engagement team, and they all would be considered as a covered member. Or the office managing partner, or the partner who can influence the attestation engagement, is considered as a covered member. And all the covered member need to ensure AICPA professional code of conduct, independence rules, integrity and objectivity. So for all the team member from staff to partner, they all need to follow AICPA professional code of conduct, independence rules, integrity and objectivity rules. Right? Make sense? Simple?
Yes, sir. Yes.
Cool. So, next is immediate family member and close relatives. So immediate family member or close relative of the covered member. So what is immediate family? Immediate family is your spouse, spouse equivalent, or dependent. So dependent may be your parents, or dependent may be your children, right? So all this comes under the immediate family member. Second is close relative. What is close relative? Is your parents. If they are not dependent, then it comes under the definition of close relative. If they are dependent, then it comes under the definition of immediate family. Your sibling, your brother, your sister, right? Or your non-dependent child. Your non-dependent child is also close relative. So what is the definition of immediate family? Spouse, spouse equivalent, or dependent, right? And what is close relative? Parents, siblings, and non-dependent child. independence would be considered impaired. Impaired means when you are not independent. It means independence is in threat, or there is a threat to an independence, that is called impaired. So independence would be impaired if an individual participating on an attest engagement has a close relative. For example, you are an audit team member and your wife is working at the client position, or your father is working in the client position, or your spouse equivalent, maybe like your fiance, would be working at the client, right? Or maybe your dependent son or dependent daughter would be working in your client location, right? So in that case of scenario, when you would be considered as not independent, right? For an audit, it is mandatory to be an independent, like CPA should be independent. But these are the scenario when CPA is not considered as independent. One, when your close relative and immediate family member is being in a key position with the client, like CEO, CFO, vice presidents, head of the department, finance controller, board of director, any such position, right? Second is the your immediate family member and close relative have financial interest. That means they are holding shares of that client, right? And they are in a position to influence the management decision. So in that case of scenario also, you are not considered as independent. Second is an individual in a position to influence the attest engagement. So far we have considered from the client side. So your family member or relative would be working at client side or having shares or financial interest in your client side. So then also your independence will impair. Now we are coming to the engagement side, auditor side, CPA side. So an individual in a position to influence the attest engagement, or any partner or partner equivalent in office in which lead attest engagement partner or partner equivalent primarily practice in connection with the attest engagement as close relative. So for example, in client side, any of the relative of the client is working in your CPA firm, right? And that in that CPA firm, the individual who is working is in a position to influence the audit engagement, or they have financial interest in the CPA firm. So independence would impair both the side. So from your audit team, any of your team member have financial interest in that company, right? Or any relatives or immediate family member of the audit team is working with the client or have financial interest in the client, then your independence will impair. The otherwise also, from the other side also, from the client side, any of the client relative or the client direct have any financial interest in the CPA firm, then also independence would be considered as impaired. Make sense? Yes, no, any doubt?
Yes, sir.
So employment relationship of covered members, immediate family and close relative with an existing attest client will not be deemed impaired. There are certain exceptions to the general rule. So when independence would not be considered as impaired, provided such relationship were permitted under the pre-existing requirement, interpretation and rules. So we'll be discussing more in detail about the employment relationship when independence is not considered to be impaired. But high level, when your spouse or maybe your immediate family member or close relative are not in a position of working in accounts department or maybe in a significant influential position. For example, let's say you are from, let's say, PwC, and PwC is doing the audit of, let's say, Tesla car, right? And you are part of the engagement team member, and let's say your brother or your sister is working in the production floor of the Tesla car, and they are doing manufacturing, and he is, let's say a welder, or maybe like a labor, or maybe an engineer in the production floor, then he or she would not be in a position to influence the financial statement of Tesla. Right? In that case of scenario, if he or she is in employment with the Tesla, then also independence would not be considered as impaired. So we'll be discussing all those rules in detail about the employment, right? But in general sense, it is being considered as impaired, and you need to give the disclosure to the engagement team and to follow your firm quality standard, right? In case
you were saying in point B that, for example, Amazon is my client. The people who are in key positions in Amazon, those close relatives of those people should not be partner or lead partner in my officer.
Yes. Yes. Okay. Absolutely.
Can you please share this file, sir?
Yes, I have already shared in chat box. You can download.
I think I have joined late, sir.
No problem. I'll send you.
Okay, thank you, sir.
Next is position to influence. Fourth interpretation is position to influence. What is considered as a position to influence? An individual is in a position to influence the adjust engagement is one who first evaluate the performance or recommend the compensation of adjust engagement partner. So for example, you are in a big CPA firm in which there are young partner, there are mid-age partner, there are senior partner, right? So young partner would be reporting to mid-age partner would be reporting to the senior partner, and senior partner would be reporting to the overall leadership of the company, of the CPA firm, right? If you consider the scenario like PwC, KPMG, Deloitte, these kind of big companies, right? You might have seen like every year, like thousands of CPAs are being promoted to the partner, right? And slowly and gradually their rank will increase, their proposal will increase, their clientage will increase, their team will increase, right? So for example, you are a young partner, right? And let's say Jaspreet is a senior partner. Let's say Kush is a young partner and Jaspreet is a senior partner, and Jaspreet is you can say do the performance evaluation of Kush, right? In that case of scenario, Jaspreet is in a position to influence the Kush decision for any attestation engagement which Kush is performing audit, right? So that partner, that Jaspreet, is considered as in position to influence. Make sense? First point, evaluate the performance or recommend the compensation. Like Jaspreet is giving rating to Kush, and according to his rating, the compensation of the Kush will be decided. Right? Make sense?
Yes.
Yes, sir.
ठीक है जस्सी?
Yes sir, मैंने उसको rating दे दिया है strategic
Oh my god, I can imagine. Next is directly supervise or manage the attest engagement partner, including all successful senior level above that individual through the firm chief executive, right? Same, like it may be, for example, mentor, or it may be counselor, or it may be the supervisor also. For example, let's say in big audit engagement, when I was doing like audit of GM, we were having 5 partners on that engagement. So 3 were young partner and 2 were young partner, 2 were mid-age partner, and 1 was senior partner, right? So those young partner were reporting to the mid-age partner. So those mid-age partner, or you can say the senior most partner, was directly supervising and reviewing the young age partner work, right? So in that case of scenario, that senior partner is in a position to influence the young age partner decision. Next is consult with the attest engagement team regarding technical or industry related issue specific to attest engagement. So you remember, like in last class, we discussed about quality review partner, right? You know what is quality review partner? Do you remember what is quality review partner? Why it's 2 week gone out of head? Any idea what is quality review partner?
Sir, I remember that we have done, we are doing 3 kind of reviews. One is quality review, the other is peer review.
Peer review.
And the third one
is
PCAB inspection.
Yes. Yeah. So what is quality review partner? What he is doing?
So the reviewer who will be checking our engagement level within the firm.
Yes.
And so, we have to see that whether the quality standards have been met or not as per the AICPA code of conduct.
Yes, absolutely true. So the partner who is conducting the quality review of engagement, he or she would be in a position to influence the decision of the engagement partner, right? So what we are learning here, position to influence, who all would be considered as in a position to influence the audit or attestation engagement partner decision, right? Next is participates in or oversees at all successfully senior level quality control activity, including internal monitoring and respect to the specific attest engagement. Again, a quality review partner position, right? So whether you are a quality review partner position, you are a reporting partner, or you are like, let's say, office managing partner, you all would be in a position to influence that respective engagement partner in the audit and attestation engagement. So you will be considered as in a position to influence the audit and attestation engagement. Make sense? Next one is
yes, sir.
Yeah. Next interpretation is key position. So who will be considered in a key position? A key position is a position in which an individual has first primary responsibility for significant accounting function that support material component of the financial statement. That means from the management side, like the CEO, the CFO, finance controller, right? They have primary responsibility for all the significant accounting policies and function of the organization, right? Second is primary responsibility for the preparation of financial statement. So you all know who is responsible for the preparation of financial statement? Management, right? And who all comes under the management? CEO, CFO, finance controller, right? So those all are considered to be in a key position. Third is the ability to exercise influence over the content of the financial statement. That means who has the ability to influence the content in the financial statement, what is to be written in the financial statement and what should not be written in the financial statement. So who is having primary responsibility of the financial statement? Management, right? Same way, management will take the responsibility to prepare like notes to accounts, to prepare management discussion and analysis, right? So including when the individual is a member of the board of director or similar governing body. So that include board of director or similar governing body, chief executive officer, president, CFO, COO, general counsel, chief accounting officer, controller, director, internal audit, director of financial reporting, treasurer, or any equivalent position. Right? For the purpose of attest engagement not involving financial statement. For example, you are doing an attestation engagement, but not the audit of any financial statement. Let's say you are attesting like turnover. Like I know last to last class, I think Sandeep has shared an example. For example, you are giving a certification on the overall sales made during the quarter, overall sales made during the period, right? For any certification purpose, but you are not doing the overall financial statement audit. Then a key position is one in which individual is primarily responsible for or able to influence the subject matter. That means sales value, sales volume, right? Sales value or sales volume which you are planning to attest. So the person who is in a position to influence the subject matter for which you are providing the attestation service is called key person or in a key position. Make sense? Who all are in key position?
Yes, sir. So I have one question.
Yes.
So like we are talking about key position. So if I want to say like at director levels, we have a sales director, we have finance director. So finance director would be responsible for preparing the financial statements and overall supervision.
Absolutely.
But when we talk about sales director, so he is also at key position, but I think he's not able to make the decision. So so we won't be considering sales director.
Absolutely. Absolutely.
So it means like even if this person is at direct level, we have to see his role.
Yes. For example, there's a marketing director, there's a sales director, procurement director. So the position could be different, but we need to see who has like overall control on the financial statement.
Thank you, sir.
Very good question. Cool. So next is family relationship with a test client. General rule is that covered members' immediate family is subject to independence rules and interpretation, right? So generally, like if the covered member family is being under the employment or have any direct financial interest in the respective audit or a test client, in that case of scenario, independence is impaired. However, there is exception to this general rule. Exception to the general rule, which include independence would not be considered impaired solely as a result of immediate family member relationship as an employment or have direct or indirect financial interest in the attest client. So let's look at left hand side. First, let's cover employment relationship. So for example, you are Sanchit Kharbanda, right? And you are, let's say, auditing for a company like HP. You are auditing a company HP, and let's say you are getting engaged with any person who is working in HP company, right? In that case of scenario, would your independence be impaired? The general answer is yes, but there are exceptions to this general. First one is the employment by the attest client. So what all things would be you need to keep in mind? Your fiance is in, let's say, is in employment at the attest client. The answer is yes. Or maybe they are participating in any employee benefit plans, right? The answer may be yes. The participation in any employee benefit plan with the financial interest in which you will get like ESOPs or share-based compensation, or you are participating in the share-based arrangement, or you are getting the rights to acquire the share, or maybe like stock appreciation plan. In that case of scenario, he or she does not serve in a key position. So when independence would not be considered impaired, when your close family member or your immediate relative is not serving in a key position for the attest client. Key position, especially in terms of financial statement, right? Like CEO, CFO, COO, finance controller, president, right? He or she is not serving in a position to influence the attest client. So same way which we have discussed earlier also, position to influence. So he or she, like whosoever is your close relative, is not working in a position to influence the attest client. Third is he or she does not serve as a trustee for the share-based compensation arrangement. So for most of the company, they create a trust for the share-based compensation arrangement, and the close family member or relative should not be trustee of that firm, right? Next is, if for any reason you have received ESOPs or you have received the rights share, or if your relative has received the stock compensation, ESOP, stock appreciation plan, right? then within 30 days from the date of that exercise, you need to dispose of those shares. So if you are disposing of those shares within 30 days, or either you are donating it or you are selling it, that's completely your prerogative. But within 30 days, if you are donating it or selling it, then also you will not be considered as, your independence will not be considered as impaired. Right? So I'll quickly summarize here. General rule is that if your close family member or relative is working in your client engagement, then independence would be considered as impaired. But there are exceptions to this general rule. Exception to the general rule is that the person should not be in a key position, the person should not be in a position to influence, and person should not be the trustee, right? And for any reason, if the person has received the share-based compensation, ESOP, right, or stock appreciation, then within 30 days of the receipt, they will be disposing of those rights, they will be selling up or donating those shares, then your independence would not be considered as impaired. Make sense? For employment side? So far, so good?
Yes, sir.
Now coming to the second side, where your family member or close relative have direct or indirect financial interest. That means they are holding shares of your attest client. In that case of scenario, general rule is that independence is impaired, right? For example, if your wife or your husband is having shares of the company for which you are doing audit, in that case of scenario, your independence would be considered as impaired, general rule. However, there are certain exceptions to this general rule. What are those exceptions? First one is neither participate on the attest engagement team nor is in a position to influence the attest engagement team. That means you are not a covered member. That means you are working in a CPA firm, but you are not a covered member. For example, let's say 𝐂𝐡𝐚𝐩𝐿 Tiwari is working with EY, and EY is, let's say, conducting an audit of Amazon, and let's say 𝐂𝐡𝐚𝐩𝐿 wife has, let's say, certain share of Amazon, but 𝐂𝐡𝐚𝐩𝐿 is not working in Amazon engagement. Neither he is participating nor he is in a position to influence the Amazon audit engagement. Then he would be considered as exempt and his independence will not be impaired, or firm independence will not be impaired. Right? Second is such investment.
I have a doubt here, like you said, na, if there is, if we are doing the audit, okay. For example, if we are doing the audit of Amazon, okay, and the CPA, the person who is doing the audit is from the audit committee or from the particular department, right? And then if the person is if the person is doing the audit of Amazon, and if she's wife is working at Amazon, but he's not in the department of the finance department, but she is holding some ESOPs and shares as well. So in that particular scenario, should be considered as a impairment.
Yes, but here I am giving different example. For example, EY is appointed as an auditor of Amazon, and 𝐂𝐡𝐚𝐩𝐿 is working in EY, and 𝐂𝐡𝐚𝐩𝐿 wife have Amazon shares, right? But 𝐂𝐡𝐚𝐩𝐿 is not part of the audit engagement of Amazon. Then in that case of scenario, EY independence will not be considered as impaired. Make sense?
Yes, sir, got it.
Yes, sir.
Earlier,
I have a doubt, sir.
Yes, Sanju.
Sir, in employment with the attest client left-hand side, in the points B to F, it is totally based upon the share-based, company is offering shares to the employee. if they purchase in the open market, then it will be a different scenario, sir.
Then it come in right hand side.
Right hand side. Yeah, I want that confirmation.
Yes. Yeah. Second point is such investment is an unavoidable consequence of such participation. So, for example, let's say Sanchit has purchased the share of, let's say, Google Alphabet, right? And then let's say Alphabet has done the acquisition of a company, let's say Byju's, right? In that case of scenario, Sanchit is ultimately going to get pie of the Byju's share also, which is being acquired by the Alphabet, let's say. So for example, what I'm saying, let's say ABC, a CPA firm, right? They are doing audit of, let's say, Byju's, right? And ABC firm is also doing, let's say, let me draw an example here. Let me present my white screen. Can you all see white screen? Can you all see whiteboard?
Yes, sir.
So let's say Google. Let's say EY is doing audit of Google. And in EY, let's say Sanchit is working. And Sanchit is working for the Google audit. And let's say Sanchit's father has shares of, let's say, Byju's. And now Google has acquired Byju's. Google has acquired Byju's. So this will automatically get into the Google, and his father has got proportionate share of Google. Let's say earlier he was having 100 share and now he is having 10 shares of Google in compensation of this 100 shares, right? This is called unavoidable situation. Make sense? Now let's come to the theory. So here what is saying, B point, such investment is an unavoidable consequence of such participation. So here you have intentionally not buy the attested client share, but because of acquisition or merger or for any such reason, those shares will come to you automatically, right? In that case of scenario, you need to dispose of those shares within 30 days. Make sense?
Yes, sir.
So then your independence will not be impaired, right?
So is there any limit, percentage limit also to have a significant share of, significant
2%,
number of shares?
2%.
सर यार तब तक होगी जब तक कोई फाइनेंशियल इंटरेस्ट उसमें होगा नहीं, राइट?
हाँ,
जैसे कोई फाइनेंशियल इंटरेस्ट जैसे ESOP या शेयर वगैरह जैसे इंक्लूड होगा, then it will be taken as impaired.
Yes. So I'm just quickly reiterating what we have covered. We have covered practice outside US CPA. There we have seen like audit and attest client outside US, component auditor or network auditor, right? Then we discuss about covered member, who all are covered member for the audit engagement. Then we discuss about family member and close relative of the covered member, right? Then we discuss about position to influence. Then we discuss about key position. Then we discuss about family relation with the attest client. So far we have covered this 6th interpretation. Now coming to the 7th one. Why I did recap? Because all these 1 to 6 are interrelated. Now we are coming to the new things, new interpretation and guidance. 7th is non-attest service. What all are non-attest services? We discussed this in first class and in last class also. What is the
Taxation, consulting.
taxation services, consulting services. Yes. What all? What?
Compilation.
Compilation. Yeah. Yeah. Review. Sorry. Preparation of the financial statement, compilation, or non-address services.
HR services.
Sorry.
Any HR services?
HR services. Yes. So just keep all those non-address services in mind, and then we will be in a position to interpret this better. When a member is providing non-address service like tax services, consulting services, HR services, accounting services, bookkeeping services in earlier period, and engaging for attached service in current period. So for example, till previous year, you were doing compilation of financial statement for a company. And now, like for example, like in earlier year, they are not required to do the audit. And now from current year, they are required to do the audit. So they have appointed you as an auditor. So till previous year, you will be doing like compilation for that client. And this year, they have appointed you as an auditor. Then in that case of scenario, member like CPA must comply with the requirement of independence, right? And independence for the member will not be considered as impaired when non-attached service provided is for prior period. That means for not relating to your audit engagement period. For example, in 2020, you are doing compilation engagement, and in 21, they have appointed you as an auditor. So in current year, you are not giving compilation services. In current year, you are not giving any non-attached service. But in prior years, you are giving, then it's okay. Then it is okay. It is, if it is prior to your audit engagement and you are giving any consulting services or you are giving any non-attached services, then it is okay. You are fine. You will not be considered as impaired. Second
but the first point says that the services in earlier period, that they must comply with the requirement of independence rules.
They need to comply with the independence rule, but independence will not be considered as impaired. They need to follow certain protocol.
Okay.
Right. Second point is related to the period prior to the period covered by the financial statement. For example, for let's say for financial year 20, they have come up with any litigation, right? Let's say you are filing income tax return for financial year 20 for them, and there is some you can say IRS has issued a notice relating to financial year 20, and in 21 they have appointed you as an auditor. For 20, for which you have filed the return, now you need to present the details in front of IRS, right? That is a non-attached service, but you can do that if it is related to period prior to the period covered by the financial statement which you are doing audit. That means you are doing audit of financial year 21, and this scrutiny or this income tax matter is being relating to, let's say, financial year 2019 or financial year 2020, then you can do that. Third is for the financial statement period to which non-attached service relates were audited by another firm. So that means, let's say for financial 29 and 2020 is being audited by someone else, and you have been appointed as an auditor in 21, and there is some issue in 2019 audit or 2020 audit, and in that case of scenario, if you are providing, let's say, any accounting advisory services to them, let's say for example in 2018 when ASC 606 has came, right? Let's say for 2016 and 17 there was someone else who was doing audit, and in 2018 you have been appointed as an auditor. And once you have been appointed as an auditor and you are doing a complete evaluation of ASC 606 implication and impact on the financial statement, and you have provided the advisory services for 2016 and 17 also to change the certain accounts and numbers. So that is also allowed. right? But in current year audit, you cannot do the non-attest services. Make sense? Yeah, Gurmihar, Sanchit, Sandeep.
So it's a got it, sir.
Okay. So next thing is appraisal, valuation, or actuarial services. So appraisal and valuation, for example, your client has certain piece of land, right? Now they wants to do the revaluation of that particular land. So let's say 50 years ago, they purchased certain land on which they have built the plant and machinery, and now they wants to do the revaluation. And they have appointed you to do the revaluation of that particular land. Or maybe they have appointed you as an actuarial for let's say long-term employment benefit provision, or maybe warranty provision, sales provision, incentive provision, or maybe for any litigation matters, right? In that case of scenario, your independence will be considered as impaired. General rule is that independence will be considered as impaired if you are providing appraisal service, valuation service, actuarial service that has material and significant impact on the financial statement of which you are doing the audit, right? General rule, independence would be impaired if a member perform an appraisal, valuation, and actuarial services for a test client where the result of service individually or in aggregate would be material to the financial statement which you are supposed to do the audit. In that case of scenario, your independence would be considered as impaired. But there is an exception to the general rule. You can provide appraisal, valuation, and actuarial services to your attest client if that services is solely for the non-financial statement purpose, right? For example, your client need to file a tender with the government, and they need to provide the valuation of their land and building in that tender. And for that, they involve you for doing the valuation of that land and building. But they will not be considering any impact of the revaluation on the financial statement, right? In that case of scenario, your independence toward the financial statement audit will not be impaired. Make sense?
But sir, if we are doing the revaluation, so it would impact the financial statement, no?
You are doing revaluation for what purpose? If you are doing the revaluation only and only for the tender purpose, and the management is not taking any impact on the financial statement, then independence will not impair. If you are doing revaluation and that evaluation has material impact on the financial statement, then your independence will be impaired.
Okay. But sir, if like in normal and accounting purpose, if we do any revaluation or impairment of a fixed assets, then it's usually for it impacts the
yes, then it is impaired. Yes, then it is impaired.
So can there be a case that we were doing for the tender and we identify it to be material, and then our independence gets impaired?
No, that's a separate engagement altogether.
Like we are doing for the ABC company, which is going for a tender, and they appointed us to do the revaluation services. And while doing the revaluations, we found that there is a material increase in the value of the asset. So in that case, it will impact the accounting as well. So will we stop the audit at that point, or what will be our course of action?
Good point, Sanchit. So here, like as per US GAAP, you can keep your land and building at historical cost. So US GAAP allows it. In case of IFRS, they want to be at market value. They want to be at fair value. In that case of scenario, it would impair. But in US GAAP, it's not mandatory to have your land and building on fair value. It can be at historical cost. Right. Ninth point is forensic services. What is forensic services? Any idea?
If there is any fraud happen, the investigation of fraud is called forensic.
Yeah. So it includes like legal services or investigation services, right? Like rightly you said, investigation of respective fraud. So within the legal services also there could be three things possible. One is you will be as a CPA, you will be expert witness of that particular service, or second you will be providing litigation consulting services, and thirds are other services. What is expert witness service? For example, there is a cyber crime, let's say, right? And you have seen those transactions which has resulted into any cyber crime, and you are providing your expertise as a witness to identify that threat, identify that risk, identify that fraud. So that is called expert witness service. Second is litigation consulting services, which is normal legal services. So let's go one by one with the expert witness service. Member is engaged to render an opinion before the trier of the fact. Trier is court, basically, right? In US, it is called trier or court. Like it depends. Like in your exam, it can come as a court, it can come as a trier. So you should be familiar with both the words. So member is engaged to render an opinion before the court of the fact as to the matters in dispute based on the member's expertise rather than his or her direct knowledge of the disputed fact or event. It creates an impression that member is advocating or supporting its client's position, thus independence is considered to be impaired. So normally, if as a CPA, you are providing any legal services to your client, so general rule is that it is considered your independence is impaired because you are protecting or defending the client position, right? And public generally presume you are in client side. So for example, you are advocating client, you're providing any legal service for the client, you're supporting any position of the client. So general public impression will be that you are in client side, you are not independent. But there are exceptions to this general rule. Independence would not be considered impaired if a member provide expert witness services for a large group. Let's say, for example, let's say, have you heard about crowdfunding platforms?
Yes, sir.
Right, what is that?
I mean, there will be a website they will post where the common man will be providing the funds.
Yes.
Have you heard?
Yeah. Have you heard about the term small shareholders?
Yes, sir.
Right. What is that?
Like who will not have any significant influence over the decisions of the board.
Yeah,
minority shareholders will be called.
Minority shareholders. Yes. Right. So I'm sure you might have heard class suits.
Yes, sir. Class action suits.
Yeah. So absolutely that. So that would be a perfect example for this situation. For example, in one company, let's say, have you heard about Lijjat Papad in India?
Yes, sir. Company,
Yes, sir.
Papad, have you heard about it? Have you heard about Ion Exchange company in India? Have you heard about this Zero B product? Zero B water purifier?
Yes, sir.
That's a product of Ion Exchange. So there are certain company in which there are like lakhs of shareholders. So everyone has contributed. Like for example, Lijjat Papad is one of the best example, right? In which all the ladies who are working are actually the shareholder of the Lijjat Papad company, right? And for example, let's say Ion Exchange, if I say in India, so in that like 76% shareholding is with the general public. As with the general public, more than 1 lakh shareholder they have, right? And let's say they have any management and management is not doing something good for the shareholder, and then those class of shareholder wants to sue to the management, right? And then you are providing legal services to the management, or you are providing legal services for those respective small shareholders, right? So now look at this exception to this general rule. The independence would not be considered impaired if a member expert witness service are for the large group. That means you are providing services to, let's say, 1 lakh investors who have invested in that company, right? In that case of scenario, your independence will not be impaired because you are providing services to the larger group, and there is a larger group. It can be plaintiff or defendant, and include one or more attest client. Or for example, let's say there is any industry issue. Let's say telecommunication would be smaller one. Maybe importer issues. Let's say there are many manufacturers in India. Let's say they are importing chemical from Africa, and they are producing different kind of drugs from that particular chemical, right? So it can be 𝐂𝐴, it can be FDC, it can be Dr. Reddy, or it can be so many companies. Let's say there are 10 pharma companies who are purchasing or importing chemical, let's say, from Africa. And now, like, let's say Indian government has put certain restriction, or these pharma companies wants to file a case against the action of the government because that's impacting their business. So all these 10 companies together file a case, and you are presenting all these 10 companies in front of the court. So in that case of scenario also, your independence will not be impaired if you are also doing audit of one of that pharma company. Let's say you are doing audit of FDC Limited. So now there are 𝐂𝐴, there are FDC Pharmaceutical, there are Dabur, there are Patanjali, there is like XYZ, let's say 10 companies who are using that respective chemical, and you guys have all together file a suit. So you are doing the audit of one of those 10 companies. Then your independence will not be impaired if that individual company for which you are auditing constitute less than 20% of the entire member. So let's say there are 10 pharma company, that means you are in 10% of the total member group, right? And your voting interest is also less than 10%, and your claim is also less than 10%, then your independence will not be impaired. But if your company for which you are providing audit service is the main plaintiff or main defendant, or have more than 20% interest in that particular litigation, then your independence would be considered as impaired. Make sense?
Yes, sir.
Right? No attest client within the group is designated as a lead plaintiff, or your client would not be a lead plaintiff or lead defendant, main plaintiff or main defendant, right? So no attest client has sole decision-making power. So 3 things should not be there. One is your client should not be having more than 20% interest. Your client should not be designated as a lead plaintiff or lead defendant, and your client should not have sole decision-making power. Then your independence for the group legal matters would not be considered as impaired. Right? Make sense? Then you can provide those legal services.
I think to understand better after this, can we solve any questions after this?
Yeah, we'll be covering a lot of questions. Don't worry.
Okay.
Next is litigation consulting services. So litigation consulting services, I'm sure as a CPA or as a chartered accountant, some of you who are in practice, you might be giving like litigation consulting services to your client, especially for the income tax matters. I'm sure you might be doing it, right? So same way as a CPA, you might be providing income tax litigation consulting services to your client, or for example, any fraud investigation, litigation support in the fraud investigation, right? So it includes those litigation service where member provide advice about the fact, issue, and strategy for a matter only, right? It would not impair independence provided the member comply with the general requirements set forth in the interpretation and independence rule. However, independence would be impaired if the members serve as an expert witness, so which is earlier one. So if member is served as an expert witness, then it would be considered as impaired. But if member is providing services, and in that services they are just sharing the facts, they are just giving the details about the issue, they are just discussing the matter, in that case of scenario, the independence will not be impaired. Other services, it includes the services where members serve as a tier of fact special master court. So for example, you are a CPA, you would be considered like you can say Congress, which is like how in India we have Parliament. So Congress considers CPA as a good understanding of the reading of the financial statement. Right? The court for any forensic matter has appointed you to review the financial statement and give back your inputs to the court. What could be the possible wrong in terms of accounting application, or you can say application of the respective standards, rules, and regulations relating to those accounting matters. Right? Here, the court has appointed you as an expert to look at the financial statement. For example, there was a movie of like Akshay Kumar in which they do a raid in some what you called किसी नेता के घर पे वो raid करते हैं, and they got a lot of cash from all the walls, tijoris, and so on and so forth. I'm not sure whether you have watched that movie or not. But let's say, for an example, income tax IRS has made a had a raid for at any politician house, and he got a lot of cash and a lot of, you can say, financial statement of different companies in which those politicians have stakes. Right now, that IRS or maybe the respective court has appointed you to look at those financial statements and understand and get back to the court like how much financial interest in which all company that politician do have, and what would be the tentative value of those interest. So those all are, you can say, your expertise as a CPA, right? And the court has appointed you to provide those services. In that case, independence is not impaired. It includes services where member serve as a tier of the fact special master court, appointed expert or arbitrator, including serving as an arbitration in a matter of involving client. So sometime, for example, any court has appointed you as an arbitrator or as a facilitator. In that case of scenario also, your independence would not be considered as impaired. General rule is that independence would be considered impaired when you are providing legal services. However, exception to the general rule is when you are providing service as a mediator, as in you can say on the order of the court, or acting as a facilitator. then your independence would not be considered as impaired. Right? Make sense?
So this we are talking from the context that the example you stated. So there were two financial statement of XYZ company and ABC company. Now, like the code appointed any CPA firm to audit or check for those two companies, XYZ and ABC. So independence will not be impaired from that standpoint. The company is also doing audit of one of those companies.
Yes.
Okay.
For example, you are doing audit of XYZ company and code has appointed you to look at the financial statement of XYZ company, ABC company, LMN company, in which they might have found someone guilty and asked you to evaluate. So in that case of scenario, your independence will not be impaired. Or second, like for example, there is a dispute between the two parties and they have appointed you as a mediator or facilitator to resolve the dispute. And till then you are doing mediation or facilitation. Your independence will not be impaired. But where you are taking the decision, like you will take this part and you will take that part, then your independence will impair. Let's say in earlier age, in 2003 or 2004, when there is a Reliance, you can say distribution has happened between Anil Ambani and the other Ambani brother, right? In that case of scenario, for example, they have appointed you as a mediator or facilitator for the appropriate distribution of the assets and liability among two brothers, right? So far, you are giving services as a mediator, as a facilitator. Your independence will not be impaired if you are doing the audit of Reliance. But when you take the decision, like this assets you will take and these assets you will take, then your independence will be impaired. Make sense?
Okay.
Last one is the investigation services. Investigation services, it includes all forensic service not involving actual or threatened litigation, such as performing analysis or investigation that may require same skill as used in litigation. Independence would not impair provided member comply with the general requirements of the independence rules and interpretation. So in case of investigation services, if you are giving, then your independence would not be considered as impaired if you are following certain rules and regulations required by the independence rules. Right? So forensic services or foreign accounting services, forensic accounting services are non-attached services. In that we have legal services and investigation services. General rule is independence is impaired, but there are so many exceptions to those respective general rule. Right? So for example purpose, we need to remember those exceptions to this general rules. Right? Now coming to the 10th one, internal audit assistance service. So as an external auditor, can you provide internal audit services?
No.
Answer is no. So general rule is independence would be impaired if member provide internal audit service to a test client, right? However, there are exceptions to the general rule, right? When you can provide internal audit assistance to your client as well. When the client has designated an individual or individuals who possess suitable skill, knowledge, and experience, preferably within senior management, to be responsible for the internal audit function. That means ultimate responsibility of the internal audit function is taken by the management, senior management person. Right? Second is management determine the scope, risk, and frequency of the internal audit activity, including those to be performed by the member providing internal audit assistance. So first one is the management is designating an individual who is being responsible for the internal audit function. And second is management is in itself determining nature, scope, and risk of the audit, internal audit. Third is the management evaluate the finding and result. So you are just providing an assistance services. For example, when it is like normal, very normal, that means you are doing like audit and you are conducting certain sorry, my bad. You are conducting certain sample tests. An internal audit wants to use those samples which you have already tested. So in that case of scenario, you are sharing all those samples you have collected and your work paper with them. That's a very plain vanilla example. You are providing support to the internal audit team by doing your, generally, like we take support of internal audit team, but there might be a possibility where internal audit team can take our support. But from the internal audit standpoint of view, it's completely like management responsibility to assign the responsible individual, assign the scope, nature, risk, frequency of the audit, and evaluate the finding and result for all the testing which we have performed for them, right? And evaluate the adequacy of the audit procedure also, which we have performed for them. So ultimate responsibility management is taking, then you can provide the internal audit assistance services. But you need to inform board of director, audit committee, or other governing body about this service which you are providing to them, and the respective rules and responsibility shared among the auditor and the management. So this need to be clearly communicated to the board of director, audit committee, or the governing body. In that case of scenario, you can provide internal audit assistance services. Make sense? Any doubt? When can you provide internal audit services? When can you provide internal audit services?
When we satisfy that by
when these exceptions are met.
Yeah. Sandeep, you're saying something?
In priority, first, the member has to inform the managing body, like audit committee or board of directors, and the work related to internal audit should be performed by all the management only, like audit procedures and its results and its performance analysis, determined scope, etc. Just we will be providing an consulting services only. The decision will be made by the management.
Yes. So overall responsibility and decision will be taken care by the management. Then we can provide that. Next is tax services. Member independence would impair when member take the ownership. When you take the ownership and you sign the tax return on behalf of the client without taking any authority letter from the client that you can sign their income tax return. In that case of scenario, if the client is audit client, then your independence will be impaired, right? When you take the ownership as a custodian of client assets or client funds, then also your independence will be considered as impaired, and you represent client in front of court to resolve any tax dispute, right? Then your independence would be considered as impaired for that respective client. However, the member independence would not be impaired when member is preparing tax return and filing the tax return with the authority with the client signature. So that means if client is doing signature, you have prepared the income tax return, client is signing, and you are submitting on behalf of the client, then your independence is not impaired. Or the client is giving you authority letter that you can submit their income tax return on their behalf, then also your independence will not impair. But if you are taking the ownership of client income tax return and you are signing on your own without taking authority letter, then your independence will be impaired. Second is when you are representing client before the tax authority for administrative proceeding. It means, for example, IRS need more information, more clarification, or wants to look at the records behind the income tax return which you have filed. To that extent, if you are providing those support, administrative support to the client in front of IRS, then it is okay. But if IRS has disputed any tax matter and you are presenting that case, now you are giving legal services, right? In that case of scenario, your independence is impaired. Make sense?
But sir, if we have the authority letter to present in front of the case as well, then our independence.
Then you are advocating. Then you are advocating client. If you are advocating client, then you are not independent.
Right? So like first and second, it's first is like if we have the authority letter from the client, then we can get for the custodian as well. If we have the authority letter, then also our independence will not.
In case of custodian, your independence is always impaired. Okay. Only for the income tax return filing. Only for the income tax return preparation and filing. If you have authority letter, then not impaired. If you do not have authority letter, then you are taking ownership of client income tax return and your independence is impaired.
Okay. Custodian की मतलब authority letter भी है तो भी हमारी impaired है.
Right. And third is when there is any like IRS has raised any issue or IRS has raised any dispute or IRS need more clarification. If IRS need more clarification or wants to look at certain documents behind the income tax return which you have filed and you are producing those documents in front of IRS, then it is okay. But if IRS has computed additional demand, interest and penalty, and IRS has disputed any stand which you have taken on income tax return, and you are providing that litigation services to the client, and you are presenting the client or you are advocating the client position in front of IRS, then your independence is impaired.
अच्छा, अगर रियल एग्जांपल लें, जैसे अगर कोई टैक्स डिस्प्यूट आता है तो कंपनी विल कम टू द सीए ओनली कि मतलब मेरा ये टैक्स डिस्प्यूट आया है, सो हाउ शुड वी गेट दिस सॉर्टेड. सो इन दैट केस आईआरएस का जो भी टैक्स डिस्प्यूट होगा वो हम रिप्रेजेंट तो एज अ क्लाइंट हम ही कर रहे होंगे, क्लाइंट को सब एडवाइस हम ही कर रहे होंगे कि इसमें क्या डिस्प्यूट है एंड क्या चीज आप कर सकते हो.
Yes, that's a good point. For example, let's say financial year 2020, you have prepared income tax return for the client, right? And now in 21, IRS has raised the dispute and they have computed the demand, interest and penalty and given a show cause notice to your client. So in that case of scenario, as a CPA, if you are doing the audit of that client, then you would not be presenting in front of IRS. So you'll be requesting client to involve other CPA or a lawyer. And you, to other CPA and lawyer, you'll be providing all the information basis which you have filed the income tax return. You won't be presenting in front of IRS for that litigation matter.
So we will be appointing third party and then we will be working with the third party, but IRS was that third party will be representing the case.
Yes. So we will be providing assistance to the client because that's our responsibility, but we will not be presenting in front of IRS.
सर फिर उसका अगर हम उसको एक्सटेंड करें तो एडमिनिस्ट्रेटिव प्रोसीडिंग्स को हम कैसे डिफरेंशिएट करेंगे?
Administrative proceeding, for example, IRS has raised a clarification request. For example, he asks you for a depreciation schedule, and then you go and present the depreciation schedule to the client, to the IRS.
Like first hearing में हमने client third party गई client IRS के सामने, and वहाँ की hearing का outcome अगर कुछ आया कि उनको कुछ further clarification चाहिए उस particular transaction के लिए, so then we can go and give them clarification as an administrative.
No. Two things. One is if the IRS has raised the clarification request, like show me your depreciation schedule, how you have calculated the depreciation. right? Or maybe let's say they ask you to show me the backup of sales, right? In that case of scenario, we can go and present all the sales invoice. We can go and present the depreciation schedule, where IRS has requested for the additional information, right? But if IRS says like you have underbooked incomes, right, and they have raised certain dispute and computed certain tax liability, and they have given you show cause notice with the tax due. So in that case of scenario, client need to appoint third party CPA or a lawyer, and we can provide assistance at the back end to the client or third party only. We cannot go in front of IRS. Next is advertising and other form of solicitation. So to all the professional bodies, generally, whether you are CPA, CMA, enroll agent, advocate, attorney, or maybe like CA, CS, ICW in India. So there is always be a restriction on advertisement, right? So I know some of you are already a chartered accountant. I'm sure you might be very well versed with what all things you can do advertise and what all things you cannot advertise, right? So in same way in AICPA professional code of conduct, there are certain restrictions on advertisement, that as a CPA you cannot do certain kind of advertisement. What all advertisement you cannot do is being part of this interpretation. A member in public practice shall not seek to obtain client by advertising or other form of solicitation in a manner that is false, misleading, or deceptive. That means you cannot do any false advertisement, misleading advertisement, or deceptive advertisement. Solicitation by the use of coercion, overreaching, or harassing conduct is prohibited. And you cannot do any, you cannot take any work from the client from the coercion, overreaching, reaching again, or harassing. What is coercion? Any idea? In your business law, you might have studied Contract Act.
Coercion means forcing someone to do.
Yes. So you should not be forcing your client to sign up an agreement with you, right? Overreaching, that means maybe like how if you have applied for one loan, I'm sure you will get 10 to 15 calls every day, right, from the loan department. They are reaching out to you again and again to come and take the loan, right? So same way you'll not be like overwhelming client, or not be so many times reaching out to the client, and it's kind of forcing like client, right? You should not be doing that kind of marketing or advertisement, and you should not be harassing your client. So those all conducts are prohibited under AICPA Code of Professional Conduct and Ethics rules. Make sense? What is false, misleading, and deceptive advertisement? An advertisement which create a false or unjustified expectation of favorable result. That means you should not be, let's say for example, if you are a CPA and you are in, let's say, in tax practice, you should not be communicating that I can assure you like 50% of your withholding tax as a refund, right? Or I can assure you 100% of your withholding tax as a tax refund. So those kind of false or misleading or unjustified expectation you should not be raising to the client. Imply the ability to influence the court and regulatory agency. So you should not saying that I have an authority to influence client. You know, if you go to the court, there are so many lawyers who will say judge is nothing in front of me, right? Have you been to any like court case or court matter where you might have dealt with any lawyer? in India?
Have gone to court, but just to see how the proceedings will be done. In front of the judge, they will be fighting. I mean, not as shown in the movies. And after the proceedings, the both lawyers come and have a tea.
Yes, that's the beauty. That's the beauty. That's very true. And but if you met with any lawyer generally in India, you will see like lawyer will say, we'll get this done,
Yes,
we'll do this, we'll do that. But
Yes,
these all are like false promises. So as a CPA, we should not be doing all such false promises, which may be saying like, I can take care of judge, I can take care of court, I know everyone in regulatory authority, I'll get this done. So no. So these kind of things you should not at all say. Right. Third is contain a representation that specific professional service in current or in future period will be performed for a stated fees or estimated fee or in a range of fee when likely to be increased in future. So you should not be saying like, we can do your accounting services at just $100 a month, let's say, for example, right? Where you know like clients number of transactions are increasing period over period, and in future you would be increasing the fees substantially. So just to get the client, you should not make your bar low, extremely low, right? Sometime you might have seen, to acquire any client, the peer, like let's say for example, have any of you constructed any home or office for yourself? Does any of you have any experience of dealing with?
Little experience, sir, not much. Little experience.
Yeah. So let's say, for example, you will invite different, you can say, builder, or you can say the agency who do the construction for the home, right? So everyone will try to bid you as low as possible so that they can grab the opportunity. And then after completing 10%, 15%, 20%, they will say like price has increased, labor has increased, this has gone, that has gone, and then they will ask you for a escalation in the pricing, right?
Yes, sir, got it. In construction also.
Right, in construction, it's very common. That's the reason I took this example, right? But as a CPA, you should not be doing that, right? To acquire any customer, let's say you have normal pricing for any particular service, let's say is $500. You should not saying that I can do this for $50, where you know like you will not be able to manage the cost, and after a few months you will start asking for escalation. That's a bad impression in the market for CPA, right? It's an unethical practice, right?
You are talking about like audit practice, right? If we are charging from the client, or if we are charging from the customer, then you have to maintain a particular standard according to
market.
Yes.
In which you can bear the cost and you can earn some revenue also, right? It should not be that after 2 months or 3 months.
But if we are charging, less from our competitors, so in that particular sense,
that is fine. Charging lesser than competitor is fine, but it should not be extremely low that you cannot afford. Yeah, so that you cannot afford the cost, and after a few months you will ask for escalation. That is an unethical practice.
Okay.
Next is, a member may render the service to the customer of third party even if third party obtain the customer by advertising, providing that such advertising is within the bonds of AICPA Code of Professional Conduct. So member can do certain level of advertisement which is permissible as per AICPA Code of Professional Conduct, right? But you should not be doing any misleading, fraud, or deceptive kind of advertisement and promotion. So that is completely restricted or prohibited as per the AICPA Professional Code of Conduct, right? Any doubt? So the last one, interpretation and guidance, and we are done with it. Conceptual framework. So conceptual framework and general standard rules are kind of residual thing. When you have nothing to look at for any guidance, you need to come to the conceptual framework or general standard guidance, right? So these are kind of, you can say, glossary, or these are kind of, you can say, basic fundamental rules which you need to apply for any situation in which you are not confident and comfortable whether it will result into impairment of my independence or not, right? So how do you need to apply the conceptual framework? First, you need to identify the threat in that particular situation which may result into threat to your independence. Then second, you need to evaluate the severity of that threat. Is it material or not? Is it small one? Then you can ignore it, right? If it is material, then yes, definitely you need to work on it. Third is, what all safeguards are available to protect yourself, right? For example, you can take internal consultation, you can take consultation from AICPA, you can take third-party legal consultation to protect yourself in that unforeseen situation, right? For example, Bitcoin. Have you heard about NFTs?
Yes, sir.
Non-fungible transactions. Have you heard about it? Non-fungible transaction.
No, sir.
It's a new currency after the Bitcoin.
Yes, sir. It's trending right
now. Right. So in that case of scenario, as a CPA, sometimes no guidance is available. Right? Where to go for any guidance, whether like my independence is fair or not. For example, you have buy Bitcoin and you're doing audit of any company of Bitcoin. So can you do that?
No.
Right?
Maybe no.
So there's no guidance available. For example, insurance, the guidance is available if you have taken an insurance. Let's say you're doing audit of LIC and you have taken at par from the market any insurance from LIC, but still you can do. You can just give the declaration and information, but you can do the audit of LIC, right? For example, you have taken any loan from the bank at the arm's length transaction price, but you can do the audit of the bank, right? Because you have taken a commercial transaction at a commercial rate which is available to the general public. But for Bitcoin, if you have purchased the Bitcoin, there's no guidance available. So where do you go? Conceptual framework, right? Make sense? And in that case of scenario, you can take consultation from AICPA, you can take consultation from the legal counsel to protect yourself, to safeguard yourself, right? And to apply all those mitigating risks, like maybe within 30 days, you will liquidate all your Bitcoin if you are appointed as an auditor for the Bitcoin, right? There are circumstances in which could specify that no safeguard can reduce the threat to acceptable level. In that case of scenario, you need to withdraw from the engagement, or you need to, you can say, liquidate those risks. So that is called conceptual framework. So these all are interpretation and guidance to the AICPA Professional Code of Conduct, right?